all to please put yourselves on mute and please type in your questions in the chat box. We will take up your questions after the presentation. Let me now introduce our speaker today, Professor Emmanuel Taiti, who's a finance specialist, economist, accountant, researcher, lecturer, and an author. His work involves analyzing corporate organizations, macroeconomic factors, international finance affairs, consultancy and research to help find solutions for organizational problems. As the country director, he manages the day-to-day operations at African Research Center and Consultancy Limited. I now request Professor Taiti to enlighten us on corporate governance.
Thank you, my sister. Thank you very much. I would also like to welcome the audience once again. I believe we are going to have a smooth journey. So you are all welcome once again. Understanding corporate governance. When we say understanding corporate governance, it goes beyond normal day-to-day management of organization affairs. So today we are going to dive deep into corporate governance, understanding corporate governance. We are going to dive deep into the understanding of corporate governance. For the last month, those who joined us, we defined corporate governance as a means by which organizations are directed and controlled. My slides is not moving. Okay. Those who joined us last month, we defined corporate governance as a means by which organizations are directed and controlled. Today, we are going to look at a different definition. Corporate governance has so many definitions. Corporate governance has so many definitions. Today, corporate governance is viewed as a business ethic and moral duty. Business ethic and moral duty. When we say business ethic and moral duty, ethic is the means by which organizations, we practice organizations lay down rules. And when these things are practiced well, individual is called as ethic person, and organization is also seen as an ethical organization. Now, when we say moral responsibility, you know, in life, by conscience, everybody owns a role and a duty to pray wherever you find yourself, which is being guided by your moral. And that is what we term as moral responsibility. So in as much as we have ethical responsibility, you need to attach your ethical responsibility with your moral duties, wherever you find yourself, be it a manager, be it a staff, be it a board member, whatever you are doing, you have rules guiding you. But these rules has to be put in operation by your moral responsibility. So this is what we term as, so corporate governance is defined today in this particular webinar as, or is viewed as a business ethic and moral responsibility. We say corporate governance as a subject exists when business came into being. So corporate governance is something that is with us in our day-to-day business. So far as you are running business and doing something, there is corporate governance with you, which you need to abide with the corporate governance rules and the responsibility. So we will again define corporate governance as a rules, practice, and process by which a firm is controlled and directed. A system of rule, practice, and processes by which firms are controlled and directed. Every organization is having a laid down rules. Every organization is having its practices. And every organization is having processes. And so when these things are adhered to within the organization, as organization, we see the organization has been practicing a good corporate governance.
Sorry to
We are still
interrupt,
on
sir.
introduction.
Can you bring the mic closer to your mouth, please? So
Okay.
that we can hear you clearly. And if
They
you
can't
can
hear me.
speak up a little bit, that'll be great. A lot of our viewers are saying that they can't hear you clearly.
Are you talking to me?
Yes, yes. Can you speak up a bit louder, please?
Louder. Okay, thank you.
Yeah,
thank you. Thank you. Okay, we are still on introduction. From the slides, you will see the table depicting the various labels. Accountability. Last month, we learned that for us to practice a good corporate governance, we need to be accountable. We need to be accountable. We need to be accountable means that you have to be responsible to whom you need to, accountable to whom you need to accountable. You need to be accountable to the organization. You need to be accountable to the members of the organization. And the accountability have to be transparent. In performing our accountability to the organization, we need to be transparent. In organization, some directors can be accountable, but they are not transparent in accountability. This doesn't order a good corporate governance. You need to be responsible. You need to be responsible to the organization. You need to be responsible to the members of the organization. You need to be responsible. If you are a board member, if you are management, you need to, at times, come to consensus. That is the consensus orientation. You need to come to the terms. That is what we term by consensus orientation. When you are taking decision, even though your decision may be good, if it's not in the interest of the organization, you have to come to terms with what will be best for the organization. What will be best for the organization? You need to be part in decision. That means you need to be participatory. You have to be part. Everybody should put his hands on deck to promote a good corporate governance for the organization. In doing that, we need to follow rules of the law. Whatever rules laid down by the organization, we need to follow. Equitable and inclusion. You have to find yourself to be part of the organization. That is equitable. And everybody should be seen as equal, so that whatever contribution you are making should also be accepted. That is equitable and inclusion. You have to see yourself to be part of the organization, and therefore, whatever contribution you are rendering will go a long way to benefit the organization. And in doing that, for us to be seen as a very good corporate governance organization, we need to be effective and efficient. It's very, very important. You can run an organization, but when effective and efficiencies are not into play, a lot of things will go bad. So it's another factor which should be seen with double I, effectiveness and efficiency. And when these things are all into play, we say there is a good corporate governance in the system, or the organization operates a very good corporate governance. Now, we are coming to look at the rules of corporate governance. What are the rules of corporate governance? Corporate governance holds a role to play in every organization. Excellent strategy leads to its development in a diverse areas. So corporate governance has a role to play, and these are what we are coming to look at. Corporate governance has a role to play, and these are what we are coming to look at. For the organization to develop, for the organization to be successful, corporate governance has a role to play. So we are starting with the role between governance body. When I'm talking about governance body, I mean the board of directors, group members, I mean the shareholders, then management and staff. Role that they can play among themselves. This is what we are coming to look at. The role of group members is to elect and nominate people on the organization governing body. I said the governing body are the board of directors. So one role that the members, that is the group members play, is to elect or nominate the governing body, as you can see on the slides. Now, a role that the governing body play is strategic planning. They take the strategic decisions of the organization. They take, through strategic planning, take a tactical decisions for the organization. When we say tactical decision, is a book I was reading tells me that a tactical decision is a military decision. When we say tactical decision, they said it's a military decision that is gearing towards achieving a particular or a specific objective. So the governing body do strategic planning, and out of that strategic planning, they take tactical decisions. Tactical decision is a decision that is gearing towards a specific objective achievement. So at any point in time, the governing body, through strategic planning, take tactical decision, which is towards achieving the objective of the organization. Then we come to the role played by management. Management, the role is to implement the strategic planning, goals and policy made by the governing body. Management see to it that the role, they see to it that they implement strategic plans and goals and policy made by the governing body, which are the board of directors. So first, what they do, they review it. All the strategic planning and tactical decisions made by the governing body, management review it. They review and digest, develop it. They digest it, they develop it to the understanding of the staff, of the functional managers and the staff. They develop it, they process it before implementation. They develop it in such a way that the functional management and the staff will understand it and implement the policies made by the management, by the governing body. Then the staff, what role do they play? They perform duties under the instruction and directions of management to support the governing body in their role. So staffs are ready to perform any duties directed by the management, functional managers, by the board, to help the overall objective of the organization. That is the role played by staffs. Then we are moving further. Role of corporate governance to the organization. What is the role of corporate governance to the organization itself? What is the role of corporate governance? Corporate governance provides a roadmap for corporations. So corporate governance is seen as a roadmap. It gives direction. Corporate governance always gives directions for the organization. That is the roadmap. Where the organization should go, where they should move forward, where they should move right, where they should move to the left. That is what corporate governance does. It helps leaders of the organization to make decisions based on one. So the leaders of the organization, be it governing body or management or even the members, doesn't take decisions just like that. They take decisions based on the rule of law, the rule of law that governs the organization. Most of their decisions is based on that. Decisions that benefit stakeholders in general. Whatever decisions, they take the stakeholders into consideration. They consider what benefit are they going to drive, what benefit are they going to gain. Then they make decisions that is based on the practical process of the organization. These are the basis of their decision making. So for a good corporate governance to function, or for corporate governance to function, the practical decision based on the practical processes of the organization need to be considered. Then we are still on the role of corporate governance to the organization. One, it resolves conflicts. Very important topic. How are conflict resolved in the organization? Because there are a lot of conflicts, if they are not considered well, it will cause a lot of jeopardy in the organization, be it at members level, governing body level, management level, and staff level. How are conflict attended to? Very, very important. Corporate governance directs those things. Corporate governance directs how conflict should be resolved in the organization. How conflicts are resolved in the organization. Then corporate governance provides a route for integrity. Corporate governance expects each member of the organization to work with integral mind. Integral mind. What you think about, be it a member of the organization, be it a board member, management, what you think about is very important to the organization. And your thinking should be with high integrity. What you say, how do you talk about the organization? Does it bring any light of integrity? What do you talk about? And what you do? How do you perform your functions in the organization? Is it with a high integrity? Integrity should be seen playing greater function. Be it a board member, be it management, be it staff. Integrity should be seen at the highest level when you go about your responsibility. Compliance. How do we comply with policies of the organization? Corporate governance role to the organization. Compliance are very important. Compliance of the law. How do we comply with the law, regulations, and standard of the organization? As much as the statutory rules and regulations of the country where the organization finds itself. Are you complying well? If you are not complying with statutory rules and regulations of the country, it causes a lot of problem to the company. So compliance should be very effective and efficient, that of the company and that of the country where the organization finds itself. Visibility of error. Visibility of error. Visibility of error, better governance, make it clear which part of the law is working and which part is not working. It should be known. You see, in some organization, visibility of the rule are not seen. Some of the rules and regulations, some will appear to be working well, and some will appear not to be functioning well. How do we react? It should be clear for everybody to see that these rules of the organization, these rules of this department are working well, and these are not working well. It should be clear for everybody to see, so that the organization will make a move how to effectively address the part of the rules and regulations that are not working well, so as to have a comprehensive rules and regulations be in place in the organization. So visibility of error is a very key factor. Some organizations are having, almost every organization, they have a lot of rules and regulations, but all these rules and regulations are not functioning well. And therefore, it becomes a detriment to the organization. But if the rules are visible, that everybody can see, the part that is working and the part that is not working can be clear for everybody, the organization will know how to address those issues, and it will enhance corporate governance of the entire organization. The best interest of business. Corporate governance help you to always act in the best interest of the business, the organization. Do you act in the best interest? When you act in the best interest, it means you are addressing corporate governance issues. You are acting professionally. Anybody who acts professionally is playing a corporate governance role and is addressing something better to improve the organization. How do you act? How do you take decisions? Do you take decisions that benefit you? Do you take decisions that enhance the benefit of the organization? Do you take decisions at the best interest of the organization? This should be a very key factor that everybody need to consider when you are going about your business in the organization. Decision that you are taking. You don't have to force decisions. When decisions are not to the best interest of the organization, drop it. Follow those decisions that will be to the best interest of the organization. Performance of the organization. We are still on the corporate governance to the organization. Performance, corporate role of corporate governance to the organization. Performance of your business. Corporate governance help your business to perform well. When good corporate governance are in place, it improves organization performance. Corporate governance functions. When good corporate governance functions are in place, it improves the organization. So corporate governance is a key factor in day-to-day running of the organization, which we need to consider. It needs to be considered. Whatever role, whatever you are doing in organization, ask yourself if you are performing anything to improve the corporate governance practice. If not, you need to drop it. If not, you need to drop it, because corporate governance is a key issue in day-to-day running of organization. We are still on the road of corporate governance to the organization. Corporate governance unlock new opportunities. Corporate governance helped to become more stable. When organization practice corporate governance, that organization is very stable and productive. And above all, they unlock. What I mean by unlocking new opportunities is they discover, through the practice of good corporate governance, they discover a lot of opportunities. That is the benefit of corporate governance. When you practice good corporate governance, you discover or you unlock a lot of opportunities. Then we are still on the corporate governance road to the organization. It reduces risks and give the organization safer growth. You see, with good corporate governance, any risk that will futurely affect the organization is seen at the earlier possible time. With good corporate governance, any risk that will have impact on the organization, it's seen at the earliest possible time. And so things are put in place to mitigate. And when that is done, it gives a safer growth to the organization. It promotes a safer growth to the organization. So at any point in time, as management staff, we need to look at corporate governance well. It fosters trust. We are still on the road of corporate governance. Corporate governance fosters trust. It fosters trust. Corporate governance fosters trust. We said corporate governance improves reputation. Any organization that is having reputation, that organization is trusted. When you have good reputation, that is what builds trust. So when the organization practices a good corporate governance, that organization has a good reputation because the organization is seen as an ethical organization. So ethical organization builds trust. So the organization is seen in a different eye when they practice good because they have the trust for the sake and the general public. Now, some rules of corporate governance. Some rules of corporate governance, or some golden rules, which I want us to look at. We have golden rules of corporate governance. In order to maintain a state of good corporate governance, it becomes important to opt for some holistic approach. And those approaches are known as golden rules of corporate governance. So someone will ask, why golden rules? Corporate governance is saying that when these rules are adhered to seriously, that is why they are golden rules. When they are adhered to seriously, there is no way the organization will not progress. There is no way the organization will not develop, will not fund development. there is no way the organization will lack growth. This is why they are termed as golden rule, because they give the organization or give assurance of the organization to the general public. They give assurance of the organization's operations and its dealings to the general public. That, hey, this organization, when you are dealing with them, it also promotes high share prices for the organization, especially when the organizations are listed on the stock exchange. When these golden rules are being adhered to seriously, the share prices of the organization rise. They increase faster. You see, the organization is seen as a very unique organization. And one, we said ethic above everything. I'll mention them and we shall look at them one by one. Ethic above everything. Two, align our business goals. Three, performing strategic management. Four, organizing regularly. Organizing regularly. Then report honestly. Report honestly. So I want us to look at these functions one by one. One, ethics above everything. What ethical function, what ethical rules are you exhibiting in your organization? This can have a dual rule. Ethic functions played by the individual organizational members and the general ethic of the organization. And what corporate governance is saying that these ethics functions should be seen above everything. It should be above everything. That one exists by the members of the organization, be it shareholders, be it board members, be it management, be it staff members, should be above everything. It means that every member of the organization should be seen performing professionally. Because professionalism deals with ethic. So every member of the organization should be seen performing professionally. When you perform professionally, it's then that you are seen as an ethical, because professionality deal with ethical rules. So every member of the organization should be seen, and not just professional, but professional in the highest. Professionalism in the highest. And there, every member of the organization will be seen as behaving ethically, abiding with rules of the law, governing regulations, standards, and all this. That is, anybody who applies these things is seen as a professional person or ethical person. And total professionalism by the board members of the organization help the organization to be seen as an ethical organization. Align our business goals. The business goals and objective that has been put in place by the organization. Golden rule of the corporate governance is saying that from time to time, these rules need to be aligned. Aligning means arranging them again. Look at their importance, redirect them, move some out, send some to the top, bring some to the down, You are realigning the objective of the organization, looking at those that needs priority or those that will help the organization to achieve its objective at the earliest possible time. You realign them, moving them, rearranging them, adjusting them, spreading them, bringing them together again. And there you'll be able to see those who which needs priority, which priority need to be given first, and which has the quickest or easy way of achieving the objective of the organization. You realign them, reapplying them, readjusting them. That is realignment. And when this is applied, there is no way the organization is not going to achieve the objective of the organization. Real alignment. And so it's a very important rule. And that is why his name Golden Rule. Because if you are able to realign, readjust, reapply, there is no way you are going to fail. There is no way the organization is going to fail. There is no way. Organizing regularly. Organizing regularly. The goals of the organization, they need to be organized regularly. Organizing regularly. If the board members, staff, management needs training, it should be regularly. It should be regularly. It should be regularly. You see, regularly? It means that there is always a regular review of things in organization. And when appraisers are working well, it is then that we'll be able to do needs assessment. Yes, when these things are done regularly, we will be able to do needs assessment, which will help us to develop training for which department needs training, which department needs organization, which management needs what is what. Yes. So organizing regularly. Whatever we are doing should be regular. If meetings should be regular, and it will help us. If coaching or advice, it should be regular. We coach members of staff, members of management from the board. We direct, we coach. Yes, it should be regular. We need to find ways to know our customers well. It's by knowing your customers that you'll be able to do what pleases them, what they really desire, what product they desire. You have to find ways to know them, to meet them regularly. You have to find ways to communicate with them regularly. Yes, knowing your customers is what you will be able to know what they desire. Their motivation regularly. When we are organizing regularly, we are meeting regularly, we are training regularly. It is then that we'll be able to motivate. Organizing meeting regularly will enable us to know where to direct our motivations. We'll be able to know which department needs motivation, which board or which management need motivation. And when the overall this organization is performing well, it is then that the organization is going to be successful. So corporate governance golden rule is telling us we should organize regularly. We should organize the entire organization regularly. If meeting, it should be regular. If coaching, it should be regular. If training, it should be, we shouldn't wait a year before the entire organization move to training and development. No. As we move along, there should be a regular review to spot which department, which team, which particular manager needs what, and when we are able to do that, it will bring a total success to the organization. perform strategic management. Every organization needs to perform strategic management, because if you don't perform strategic management, you wouldn't know where to a priority area to direct resources. Perform strategic management. Performance of strategic management help the organization to take tactical decisions. And tactical decisions help us to achieve specific objectives of the organization. So at any every organization needs to perform strategic management. Strategic management even go beyond tactical decision. It helps the organization to perform strategically. And every organization that performs strategically always achieve its objective. So you cannot operate as an organization without taking or performing strategic decision. You are going to lose. You are going to lose. You are not going to achieve your objective. Strategic decision. Strategic decision is what holds the entire organization strategically. If you are just managing the organization, success is difficult to achieve. Just managing, success is difficult to achieve. But when you are performing strategic management, which helps you to take tactical decisions, some specific decision that will help you to achieve the objective of the organization. Yeah. So the golden rule, one of the golden rule is telling us that we should be serious in performing our strategic management. That is the governing body. They perform the strategic management. They direct the entire organization with a strategic management. And with strategic management, they are able to take specific decisions, tactical decisions for the organization. Then report honestly. Report honestly. You see, it should be every organization priority to be integrity in their reporting entities. Reporting entities is a very serious issue. Reporting into entity. That is what brings the organization to light. That is what stakeholders are interested in, especially when it comes to financial report of the organization. It's a very interesting area which helps the stakeholders to take decisions about the organization. We learned from Aaron and Wetcon. The collapse of Aaron and Wetcon was as a result of Aaron not reporting honestly. Aaron and Wetcon collapsed because they were not reporting honestly. Aaron and Wetcon in the US. About 15, 20 years ago, Aaron and Wetcon, Aaron was one of the energy giants in United States of America. Aaron was taking deposit of pension savings for workers. Aaron is having a financial institution and is also into energy. And what Aaron was doing is that Aaron wasn't reporting honestly. They were doing what we term as their financial statement. Aaron was not actually making profits, but they were doing what we term as window dressing the financial statement. Window dressing the financial statement means that they were showing certain figures that wasn't actually correct in the financial statement, just to show to the general public that they were making profit. but in actual sense, Aaron wasn't making profit. The then external auditor employed, instead of audit the financial statement faithfully, was rather rendering consultancy to the organization. He was helping them to be hiding profits. Then that audit company was Atta Edison. He was among the five, what we call the five giants in financial reporting. You mentioned PricewaterhouseCoopers, Ernst & Young's, KPMG. They were among the five financial audit giants in the world. But Atta Edison was collapsed because he wasn't honesty in his dealings. He was helping the company to bring out what is not profit, telling the general public that they were making profit. Not knowing they were paying interest on capital. The company wasn't making profit, but they were paying interest. They were actually using the deposit that they have with them to be paying profit as if they were making profit. See, and this one was found, collapsed Ernst & Young's. And this collapsed, Aaron, and even WorldCom. And this brought a lot of regulations in United States during 2005, 2005. Brought a lot of regulations, financial regulation and financial screening in the United States of America. So reporting honestly by organization is a very, very, very important issue. It's a very, 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 that is why it's termed as corporate governance. Let your organization be seen as it is. Come out with whatever is the vivid report of your organization. And I believe me, if you are following good corporate governance, whatever reports that come out from the organization, whatever good report you send out to the general public will be accepted. And it will help to even shoot up your shares if you are an organization listed at the stock exchange. But when you are not reporting honestly, when it's found, it's going to collapse your organization. It will not be, your organization will not be seen in, and you know how the stock exchange operates. A little information about the organization, any advert information about your organization, if you are listed, you will see your share prices dropping. If the stakeholders find out that, or prospective investors find out that you are not reporting honestly, if they realize you are not reporting honestly, a little adverse information, you will find your shares being, they will start dropping at the stock exchange. That is how, and then negative information about. So it is important we report professionally, with professionalism, with high integrity and honesty. We have to be honest in our reportage. Report we give out to the general public. Very, 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 very important. Very, very important. Because you should be aware that we have an analysts probing into your organization. We have analysts. We have strategic analysts. We have financial analysts. We have even corporate governance analysts analyzing each and every organization. So you put up, when you put any report up, you see a lot of people going into it and punching whatever you brought out. A lot of things are happening, which you will not be aware. And when your organization is found to be a dishonest company or organization, is going to bring a lot of disgrace, and you will see things declining. And lastly, to conclude, we want to say corporate governance holds a role to play in every organization. Corporate governance is a very important and dynamic issue that we need to consider seriously, because an excellent corporate strategy or corporate governance leads to development and growth and success in different key areas. With a little information, as I put here, price index started increasing just this 2021 for this some organization after their reports were brought out. They gained trust in some organizations, and so people start rushing to put their money there, invest in the organization. So you see a higher trend of their share prices rising. And when it happens so, it brings growth and development into the organization. I want to say thank you. That's the end of my presentation, and thank you for listening.
Well, thank you so much, Professor. Thank you for the wonderful insight that you provided us on corporate governance. Thank you very much. We've got overwhelming response in the chat box. And we've got more than 30 questions waiting.
Okay.
Yeah. So Chigwada has a question for you, which is, are there any indices or ratios to measure corporate governance?
Yeah, corporate governance is we don't have ratios in measuring corporate governance. We have rules and regulations that we look at. And when these rules and regulations are being in place, we analyze how you go about your ethical, do your ethical businesses, how your organization is integral to the stakeholders, how your organization is honest, how transparent the organization is in dealing. You know, we have people dealing with you day in and out, so you don't need to perform any ratio calculations. People, individuals, organizations are dealing with you. And so if you are an honest company, after dealing with you, I will be able to see that this company is an honest company. I don't need to perform any ratio calculations. Thank you.
Thank you so much. Now, the next question we have is from Neshiko. Should the members of body of governance have any age limit, sir?
Be a little bit louder to me.
Sure. Should the members of the body of governance have any age limit?
No, age limit, not actually. But before I believe before you will be, the experience involved before you will be appointed as a board, the age you might be before you gain those experiences, at least above 30 and 40, you should be above 30 and 40, yes, because the experience involved before you will be appointed as a board member or a director of organization, it involves a lot. It involves a lot, and before then, nobody will give the age to any age to you, but you need to acquire a lot before. And
okay, thank you so much for answering that. And I would like to tell all the participants, thank you so much. Everyone will receive the certificate of participation on their registered email ID. This webinar is live, it's recorded live, so you can access it through YouTube and through our website also. Thank you. Now, the next question is from Alad Katiki. How does the governing body direct the organization when they are not actively involved in the day-to-day running of the organization, is the question.
Please come out again. The question is not too clear.
How does the governing body direct the organization when they are not actively involved in the day-to-day running of the organization?
Oh, easy. They govern based on policies and objective of the organization. They direct, and management assimilate, review, and assimilate their policies and these things. So they have policy and rules and regulation guiding their operation. They are not just operating. Policies, rules, and standards, as we've seen. Yes, they have law, they have rules of law, regulations, and standard that is guiding them. They have standard in place that is guiding them. So when they are going out of this, they know. When they are going out of coverage, they know. And they have the objective of the organization that everything is gearing towards. You see, they have objectives like a lecturer. We lecture based on course outline. When you are lecturing, you just don't lecture the students. You have a course outline governing whatever you are doing. If you have to achieve corporate governance, you have to treat A topic, B topic, C topic. You have to treat E topics before you have total corporate governance as a first degree holder or as a lecturer lecturing first degree or master's. You have a course structure governing what you're operating. So it is, they have standard, they have policies, and they have regulations. Above all, they have objective of the company in place. Thank you.
Thank you so much, sir. Now, the next question that we have is from an anonymous participant who says, who plays a big role in the business? Is it the shareholders or the board of directors?
They all play a big role. Both play a big role. Thank you.
Okay. And Tony has a question for you. Is it appropriate for the board chairs to be taking more power in an organization? For example, signing documents and checks of the organization?
To take more powers. It depends on their rules and regulation directing the board. I know organizations that the board chair sign checks. You understand me? Yes, there is a topic I want us, if the organization, my organizers will allow me, the dual role of the board chair and the CEO. The dual role of the board chair and the CEO, a topic I want us to treat. So when you see another, you just join us. We have a lot of good things for you. The dual role of the board chair and the CEO. And I think when we treat that, you understand these things very, very, very well. So there are organizations that board chairs sign checks. It depends on their policies because they have policy governing their operations. Thank you.
Thank you so much. The next question is from Nishiko again. What could be the good model on governance body? For example, should the chairperson be the same as the CEO of the company?
That is what I'm saying. The dual role of the board chair and the CEO. Corporate governance frown on that. Corporate governance doesn't allow the board chair to be the same as the CEO, which most organizations have. So the next, I want to treat that, and I will advise that you all come to listen again. We want to treat that, the dual role of the board chair and the CEO. For corporate governance frown on that. Corporate governance doesn't allow that, for the board chair to be the same as the CEO. Yes. Thank you.
Thank you. Now, the next question is from Aled. How are multinational firms conducting their corporate governance to ensure their subsidiaries? Sorry?
Yeah, you have to increase your voice a bit for me. I'm not
Okay. How are multinational firms conducting their corporate governance to ensure their subsidiaries are adhering to the good governance practices.
How are is it management or?
Yeah, multinational firms.
I still don't get the word.
Okay, how are the multinational firms conducting their corporate governance to ensure their subsidiaries are adhering to the good corporate governance practices?
Oh, okay, okay. You see, as I said, individuals have to perform their everything ethically. As I started with, we have ethical responsibility and we have moral responsibility. These two to be seen working. If you are be it a board, be it manager, when these two things are, you see, moral, when we talk about moral, it's your conscience, your conscience. You know, our conscience is also help to govern our activities. Your conscience, without even rule, your conscience should tell you that this thing is very bad, this thing is good. Every individual, if you want to be seen as ethical person, you have to blend the ethical rule and your conscience. Your conscience should guide you, while the ethical policies are also guiding you. And when you allow your conscience to guide you, this is where you will be seen as an ethical person. An ethical person is somebody who obeys rules and regulations of the organization. He ensures that even mandate of the country or statutory of the company, if he's a manager, are performed well. He ensures timely performance of all these things. It is when you are doing these things, you ensure that company policies, rules and regulations are working well. That of the policies of the country that concern the organizations to, you are performing them well. This is where you'll be seen as an ethical person. And all these things are out of good corporate governance. For organizations to perform these things well are all functions of good corporate governance. Thank you.
Thank you. Now, the next question is from Felix. What should be the measures to be put in place for the organization which is not working well, which is not doing well?
Well, it's not doing well in terms of corporate governance. Organization which is not doing well. So one, you have to ensure that every company is having rules and regulations. Every company. Some have fantastic rules and regulations and policies. But now, how to enforce them? How to enforce them is the problem. These policies and even country, as we find ourselves to be citizens of a country, our individual countries have fantastic rules and policies that when they are adhered to well, our countries will become, because some of the things demand we discipline ourselves. But ask if we are disciplining ourselves. So it is with organization. You see, some things are not going on well in our countries, our organization, because we need to be disciplined for those things to function well. But are we disciplined? You see, so we have a lot to give out. We have a lot to give out, be it organization or as a members of one country. We have a lot to give out. If it is discipline, we need to discipline. If it's organization, rules and regulations of a country, we need to abide with those rules and regulations, because no rules and regulations are just drafted. A lot of things were taken into consideration before these rules and regulations were drafted. You see, a lot of things. And I believe when we are able to do it, that is then that we see ourselves, be it a country organization, growing. Thank you.
Thank you. Now, the next question is from David, who wants to know how can one apply corporate governance to a small business that are able to make about $1,500.
Yeah. It depends on yourself. If you want to, if your company is a small business, then it means you have to put a lot in place. We have some sole proprietors which don't want anybody even to see their checkbook. Their checkbook is always in their bag when they want to pay something, even though the company. In that wise, you need to have a manager, you need to have an accountant who controls your account, your records for you, because you know if you are sole proprietor, you will need to put a lot in place. You need to have a accounting department, you will need to have internal audit department, you need to have a management team. You sit down and put somebody in place and ensure that whatever you put in place is working well for you. If you are able to do that, but as a sole trader or sole proprietor who is having his check in his bag, and wherever he reaches, you remove it and write it. No proper records are being kept. In that wise, it will be difficult to have corporate governance in place. If you allow yourself, you can also have good corporate governance in place. Thank you.
Okay, thank you. Now, Professor, we have another question. Tanjina wants to know if corporate governance depends on all the countries. Is it applicable worldwide?
Hello?
Hi, can you hear me?
I can hear you now.
Okay. So Tanjina wants to know if corporate governance is applicable to all the countries worldwide.
Corporate governance is international. It's international. Corporate governance is international. You see, I just gave you a example of WorldCon. WorldCon is in the United States of America. Last month, I gave example, a case study about Facebook. Facebook is international. You see, so corporate governance is international. But it seems some people are not even hearing about corporate governance. It's a hot cake. It's a good area, and that is why we are treating it. It's a very good area which every sector, every organization needs to know and practice. Very, very, very good area. Thank you.
Thank you, sir. We have a lot more questions. However, there is, Jonas is saying, thank you very much, sir, for enlightening our understanding in corporate governance. Do we recognize it as democratic institution or government? And he then wants to know that tribal conflicts have lasted for long and still persist. So he's giving an example of the typical example of Ghana northern sector. So how, government may have done it to solve it, but to no avail. So how does this situation solve the conflict, as corporate governance? How does this solve?
He's talking about Ghana.
Yes.
Ghana northern sector. Yes. A very good question. A very good question. Question about my own country. Okay. Yes, what I've seen about, which I wouldn't like to, is they are politicizing the whole issue. What is happening at the northern sector? There is politics involved, which where corporate governance cannot do anything about. You are but if corporate governance, like our country is all the governmental sectors, if I should say, not only Ghana, but worldwide, corporate governance is not working well. If I should humbly say that, yeah, corporate governance is not is not adhered to well. Yes, I humbly want to say it. Corporate governance is not working well at all. Most of the governmental sectors are not applying corporate governance. And that is why we are seeing what is happening at the northern part of Ghana. Corporate governance is not working well at all. When it comes to performance of politicians, corporate governance is not working well at all. So thank you. Thank you. So if our people will tend to corporate governance, things will work well. Thank you very much. Yes.
Thank you. The next question, so Denubio has, he says, "Hi, dear Emmanuel. Many thanks for your great explanation." He has 3 little questions for you. The first one is, if the manager has to make a critical decision that will benefit the organization, but gets off the rule of corporate government, how do we take the decision and avoid the wrong decision? That's the first question.
Yeah, the manager, yeah, in actual sense, doesn't take the decision. Manager assimilates the strategic decision taken by the governing board, that is the board of directors. He digests the decisions. So the functional managers and the staff could understand and implement. So in actual way, yeah, they take the certain decisions, but not broad decisions. The broader decisions of the organization, no. Managers take some decision, but to some, they have a limit. But the broad decisions of the organization is being taken by the governing board. So the managers assimilate, they digest them and assimilate, so that the functional managers and the staff could implement. That is what happens. That is what happens. Thank you.
Thank you. Now, the next 2 questions are pretty much the same. How to make sure that the decision we are going to take are right decision and wrong decision. I believe, unless we are in that situation, I think, Professor, if I'm right, we can't really answer or comment on that.
Yeah, so he said, how do they know they are taking the right decisions? Is that a question?
Yes, that's a question.
That is a question.
Yes.
Yes. I told you they operate with rules and regulations, standards, and the objective. Above all, they have the objective of the organization ahead, in front of them to achieve, or before them to achieve. So in applying the rules of the regulations of the organization, they don't eliminate the objective of that is what they want to achieve. So all decisions and policies that they are taking is geared towards that goal. There is a goal before them. So they ensure that they don't go outside that goal. Yes, the organization has put a goal before them. So all decisions is gearing towards that. So when your decision is not directing the goal, by all means you know. And that is how we have review at a regular interval. The regular decision that I said, it also applies to them. There should be reviews. You take the decision within a short possible period, you review. You ensure that if you realize it's not meeting the objectives, or it's not directing the objective, you review it. Review means you eliminate and add. That is how we review. If you realize it's not working, there should be quick review. So board management, maybe at a quarter, they need to take some review of their operation with the organizations. They need to, policy directions, they need to review. If it's not work from the review, they will add and eliminate. Thank you.
Thank you so much. Now, one of the last questions, Eugene wants to know, with regards to the role of corporate governance to the organization, can you give a few practical examples of the points you've given till now?
Yeah. Practical example. I'll go back to Aaron. Aaron is managing people's pension fund. If there are, if the organization is not managed well and you are not making profits, don't deceive people you are making profits. You see, your reporting entity should be as it is. You understand? This is practical example. If you are not making profit, you are not making profit. Don't window dress the accounting. The financial information, I mean the financial statement, the published one, the one that we put in daily graphics. Don't manipulate that financial statement to show to the public that you are making profit. This is practical example. If you are not making profit, you are not making profit. Let's an analyst see what is happening in the organization and let them come out with some comment to help you. You understand me? The organization is not making profit. Don't deceive the general public. Give the statement as it is. If loss is loss. If it's profit and it's just minute, show it out to them. But don't window dress the account. You understand me? When you are doing that, window dressing the account, one, you are deceiving the general public. You are not putting out good information to them. You are deceiving the general public, which is very, very, very bad practicing. Very, very bad practicing. Thank you.
Thank you, sir. There's one more question from Zena. How does transparency apply in a non-profit organization where you are working with mostly volunteers?
Yeah, I think that is the best place we should see corporate governance. Some people are volunteers, so you need to be very, very, very faithful. Work with the policies. You see, now, if you know non-profit organization, if it's an NGO, you have a percentage of your income that should go to the main objective of the company. If you are the main objective of the organization, if you are assisting, let financiers know that because of AB, you are exceeding. Don't deceive them. You understand me? For that place, corporate governance rider should be seen because people are financing the organization. They give you a percentage, numerations and all this, maybe 25%. The rest of the 75%, use it for the performance of the objective of the organization. If A, B, C, and you are exceeding, let them know. Report with integrity. Let your report be honesty to them. Don't deceive them because they are your financiers. This is where even corporate governance should be seen at the highest. Yes, because they work with policies and everything. Thank you.
Thank you. Now, Paul has a very interesting question. In case of a whistleblower, how does the current corporate governance structure protect them in terms of ethics and corporate policy?
Again, please come out again.
Sure. In case of a whistleblower, how does the corporate governance structure protect them in terms of ethics and corporate policy?
As incorporated in their policies. You see, they have the policy of the organization. They have the structure of the organization. The policy is what is directing them. Who play what rule? Since I've said it, let be clear on the functional responsibility of the organization. The functional responsibility of the organization. From down to top, let the whole organization, entire organization, know who perform what and who doesn't perform what. When these things is clearly and everything is done according to the policy of the organization, it makes everything easy. You understand me? You have the structure. So there should be a clear responsibility structure, if I should say that. There should be a clear responsibility structure. When this is known well and is according to the policy of the organization, it becomes easy. It becomes very easy. Thank you.
Okay.
Yeah. Are we done?
Yes, yes.
Okay. Okay.
Yeah. One last question.
One last question.
Yeah. What are the effects of good corporate governance on a capital market? This is a question by John.
Yeah. Capital market. A good corporate governance, a good corporate governance when there is a good corporate governance in place, one, on the capital market, you will see the price of your share flying in the air, increasing day in and out. If every prospective investor trusts your company and they know you put up good reports, you are doing well, day in and out, your share prices will be progressing, increasing day and out. We have some companies like that. We have some banks like that. We have some organizations like that. You see their share price increasing daily. It's because of information that is out there. The competition, they build their reputation, they have trust for investors and prospective investors. You see, so a little, you bear with me. Even if the organization is doing well, a little negative or adverse information about the company, the following day or two, you see their share prices dropping. Corporate governance is very sensitive. Very, very sensitive. If there is good corporate governance, it progresses your shares and everything. People have trust in you. They know when they put their money in you, your organization, they are good. You will not let them down. You will not let them down. Thank you. Thank you.
Thank you so much, Professor Taiti, for this insightful session on corporate governance. Thank you very much. And now you can stop the screen share, sir. Thank you.
Thank you. Thank you. Thank you.
I'm sure, sir, you can read it in the comments. Everyone's very excited and happy to be a part of this webinar.
Comments to me.
Sure,
and tell
we'll
them
do that.
We have about 3 topics to treat, so we advise them they join us anytime we put out the adverts.
Thank you so much. If you all want, you can note down Professor's email ID. If you all have any questions, you can reach out to him. Thank you very much. Professor, if you can stop the screen sharing, please. I would like to, take all of the participants through a small presentation on UniAthena, our company.
Okay, go ahead. Also, I should stop my sharing.
Yes, please.
Okay.
Thank you. So thank you so much, all the participants. I hope you also, had a lot of, not just insightful, but a lot of things to learn from Professor. Now, I would like you all to just share a little bit about our company, UniAthena. You can visit our website also, which is www.uniathena.com. So UniAthena is, we are affordable, flexible, and accessible company. We are a part of Westford Education Group, okay? Our parent company, our headquarters are based in UK. We have more than 2 lakh learners with us. Our learners are based globally in more than 200 countries, and we offer more than 400 courses on our website. So please take a look at our website. We have a lot of tie-ups with SQA, GMU University, Cambridge, Aberte, UCAM, CMI. We've got accreditations from all these universities and colleges. We offer a lot of academic courses, which is your master's, MBA, doctorate courses. And we do offer a lot of short courses online, which anyone can enroll and learn for free. So do visit the website to take a look, wherein you will get to know more about basics and essentials, diploma, executive diploma. And why UniAthena? Well, because we are flexible. All the reading material, everything's online, which is at your pace. And we have a personal tutor connect, which means that even though everything happens online, if you have any query or any support is required, you have access to a personal tutor to help you out, through your journey here at UniAthena. Now, our courses are 100% online, bite-sized delivery, okay? You can watch you can study as you go, okay? As per your convenience. We have video tutorials online. We have essential readings. Again, one can go through all this at their own pace. Then we have additional readings, reference materials. We have tie-ups with an online library also. Okay, do visit our website, which is www.uniathena.com. We have a global presence. We're based in UK, we're based in India, we're based in Middle East, in Sharjah. So if you have any questions or queries, please do reach out to these 2 email addresses, admissions@uniathena.com and fatima@uniathena.com. I would like to say thank you to everyone for joining in this webinar on corporate governance. Thank you very much for your time, everyone. You all will get the participation certificate on your registered email IDs in 3 to 4 weeks' time. You can visit our website, or you can watch the same webinar on YouTube. Whoever wanted to go through the presentation or slides, you can do that. Okay. Thank you everyone for participation. And thank you so much, Professor Taiti, for giving us your time.